The Chinese tariffs on wine brought the Australian industry to its knees, but now hope is building for South Australian growers as the Prime Minister visits China this week. But some fear re-entering the market will not be a simple task.
It's been 3 years since China put a cork in Australian wine exports. The 218% tax imposed on the Aussie drop, crippling the industry.
That's sort of manifested in very, very low demand for wine grapes and wine. A lot of wine sitting in tanks and bottles at the moment, and a lot of real stress on both winemaking businesses and grape growing businesses as well.
The taxes were introduced after a diplomatic dispute in 2020, when Prime Minister Scott Morrison called for an investigation into the origins of COVID-19. Before the tariffs were put in place, the export of Australian wine to China was valued over $1 billion. Now, annual exports are worth under $10 million.
It's been something like a 99% reduction in export value to that market, which has had an enormous impact on our sector over a couple of years now.
South Australia's Riverland, the largest growing region in the country, has been one of the worst affected. The price growers receive for Shiraz, the most common variety, is down 67% since 2020.
Certainly there's a lot of pain with growers, and it's very heartbreaking really for growers to see their hard work and labour and come to nothing, or in many cases nothing.
Exports to China made up 50% of international trade for popular wine brand Bird in Hand in the years leading up to the COVID-19 pandemic. But a shift to diversify into UK and US markets left the SA family business more fortunate than most.
We had such a wonderful relationship with China. We were really close as countries, and I think that's a shame. That said, China's a really, really important market for South Australian wine, and we look forward to re-entering China in the future.
As it stands, China has agreed to a 5-month review of the wine tariffs, and the PM's visit this week has ignited hope the restrictions could soon be lifted.
I think it's been very difficult, and I think grape growers in particular have carried a big load, and certainly the tariffs coming off and freeing up China is hope in a very difficult climate. So.
But re-entering the market may be more difficult than expected.
I think the thing that we all need to be mindful of as well is that while it was a $1.2 billion market for Australia a couple of years ago, we're not likely to be returning to a $1.2 billion figure in the short to medium term. The market in China has changed considerably over the last couple of years. People tend to be buying a little bit less wine, and other producer nations have come and taken some of that market share as well.
With a pathway for removing the wine tariffs now in place, only bans on lobster and red meat exports remain. Monique van Hayden, Sky News.